I just wanted to take into account five main purposes of financial accounting standards. First of all those rules let us to build if I can use build word build for financial statement, but to build financial statement that they could be comparable for all industries, for all companies, and we still use financial statement. For example, speaking about me, one of my services is to evaluate credit risk, and for evaluation credit risks, I have to assess financial statement. And of course, I know certainly that all those financial statements are created or are built using one of another set of guidelines. First of all, comparability. Second one, all financial standards, if we follow our financial standards, it means that all our financial statements are transparent. It means that no one things are hide in this financial statement. What we have, we record it. Yes, as I said, a lot of financial assets. If that rule should make decision based on really good built all financial statement. And it is created for how profitable one or another company.
And in Ukraine, we have the same situation when one company can order financial accounting other companies.
Yeah, okay. Yeah. A little bit, I don't know. You actually, probably you missed why I decided to put this picture to this presentation, but I can explain. First of all, on internet, actually, there are a lot of fancy pictures about it's not my job. And if, for example, people don't follow set of rules, it means that we have this result. And financial accounting standards actually were created definitely for all financial department, for example, that no such situation will be occurred in a company when one part of people does something and another part just following their own rules, does I don't know, different way. Yeah, something by different way. Actually, I like this picture. It shows that that we actually cannot think that it's not our job. We have to follow all financial standards and do our job actually by those following those rules. Yeah, and all financial standards actually, it's not important what we chose one or another, but it's like a base for accounting policy. No, actually, there are no companies that work without accounting policy. If it is a really big one company, of course, it has not only accounting policy, but and financial management policy. Sometimes there are really two policies, and we follow both. Yeah, it means that financial standards are base for creating that policy. Policy typically is document, paper document or not paper document, but signed by director or general director, general management manager, but everyone, especially in accounting department, follows those accounting policies. And of course, accounting policies are created by really experienced people, experienced specialists, and not all accountants actually know every financial standards. It even not necessary for all accountants. But if accountants get accounting policy, it means that at least they can open their own part. For example, I don't know if accountants is responsible for liabilities, or I don't know for receivables. He knows, or he or she knows that she or he applies those rules. And of course, accounting policy is not like constant. Of course, it could be changed. It could be changed by activities, because companies can grow, can change, and of course, not all accounting policies rules can be applied in company. Yeah, a little bit of theory from accounting policies, and how actually accounting policies and accounting standards are created. First of all, revenue recognition. Second one, expenses recognition, inventory, assets, depreciation, amortization of assets, financial instruments like loans, like bonds, like I don't know, a lot of actually we have financial instruments, leases, foreign currency transactions. It's not relevant, for example, for Lithuania, but as I see from financial statement from Ukraine, from my Ukrainian colleagues, what they prepared, of course, there are really big differences between Ukraine hryvnia and euros, for example, or USD. And of course, we have to apply financial standards to recognize these differences. And accounting for income taxes. You know, just to have operating income, we cannot just applying our income taxes. As I said, in Ukraine, it is 18%, but we cannot apply just that percent. We have to calculate or count how many deductible, for example, we had expenses. What revenue we cannot, for example, input to this tax calculation. And I will conclude about accounting policies. It means that if we have accounting policies that are created using financial standards, we avoid the situation when different people do different work, and actually we get not admired, how to say, result, because how you see in this picture, the result is wrong. We have to get right result. And accounting policy created and following financial standards actually let avoid this wrong results. Second part, as I said, I will introduce the different financial accounting standards. As I said, there are two, GAAP and IFRS. As I know, actually, during when I was preparing for this lesson, actually, I also didn't know the history of GAAP or IFRS. I just knew that IFRS actually is used only for international company, which financial statements are consolidated. And but for our local purpose, actually, we use only GAAP. It means that GAAP is GAAP, General Accepted Accounting Principles. We use only GAAP, and in Ukraine also companies that are not from international group also use GAAP. Just GAAP. GAAP is related in Ukraine, for example, is related to what to require your tax authorities and your all law documents. I don't know, VAT, for example, and other taxes. I don't know, actually, you have a lot of them. We have also a lot of taxes, but yeah, GAAP, and actually we use not GAAP, we say local standards. But in this, you just know that in this presentation, local standards, I changed local standards to the GAAP. And international finance reporting standards. I don't know if you need or not the history of GAAP of general accepted accounting principles, but I will share my presentation with you. And I just, because this presentation has some links to my personal documents, I will delete them and I will share this presentation to you. And if you are interested in history of different financial accounting standards, you can find them here, but I will not tell about it. As I said, IFRS, International Finance Reporting Standards, actually created 40 years ago, and for international consolidation purposes. They are still developing. They are not developed fully, as for example local standards, because even local standards, even them, they are changing every year. Could be changed, at least in Lithuania they could be changed, but common principles, they are constant. In international finance reporting standards, of course, common principles are not changing, but there are a lot of different tasks have International Accounting Standards Committee, and right now just also don't know every standard that they created, but right now that document, IFRS standard document, content is about 4,000 sheets, a lot of pages of standards. And I will introduce how, for example, because I have a Lithuanian, one of my company Lithuanian figures, and how I translated it to IFRS, and you will see how can change, for example, profitability or equity or assets. Yeah, as I said, IFRS is not constant. It's changing, and we still have to take into account that what we did, for example, 2 years ago, right now it could be wrong, and we have to change our approach to financial accounting. Yes. Generally accepted accounting principles and IFRS, both of them provides us guidelines, rules, procedure to create financial standards. And as I said, both of them are based for accounting and finance management policy. Yeah. I concluded already what I wanted to say. That both of different set of standards actually make us to be certain that all decisions that made in our company, they have some proofs. And for example, if we do something not by accounting standards, it means that all decisions, for example, for investment, for leases, for different activities could be wrong. Yeah, but if we followed all rules, it means that all our decisions are very right, very correct, at least. The third one, impact on profitability. I don't know, do you have any questions? If you have, please say, because I am not an academic person, and sometimes I can tell a lot, but If you have question, please.
It's okay. I think such in end of our lecture, if anyone will have any question, then we leave little bit time for answering question.
Okay, super. I actually thought that if we have time after my speech, we can actually do this question and answer session.
Okay.
Yeah, impact on profitability, or how it was announced in lesson on profit. But profit it's like only figure, but still stakeholders. You know that actually there are a lot of formulas how we can describe or assess our company's activities, but for our stakeholders or our shareholders, still profit and profitability is the most important things, because they have dividends, they can share their earnings to the investment and do some additional businesses, but still profitability is most important thing, at least for shareholders and stakeholders. For me, for example, as being a financial department officer, could be profitability. It's not most important thing. Could be that I will be divide all our sector, all our activities center, and I will be assess all those activity sector, but still for shareholders, main profitability, main index is important. What profitability means, actually? As I said, that measurement for of business, and actually when we see our profitability, we can make a right decision to invest, to buy, to sell our business, to develop, to I don't know, to close some not profit activities, and our profitability actually shows us how we can generate financial flows. Financial flows, it's not only cash flows, but financial flows. Yeah.
It's okay.
Financial flows, it's not only cash flows, because cash flows is what we get at the end of period in our to our bank accounts. Financial flows mean that how we created, for example, assets during a certain period, or how we actually how many liabilities we have, how many receivables we have. What I mean when I say financial flows, because for me, of course, for stakeholders and shareholders, most important is cash flows, because they see how many hryvnias or euros they have in bank. But for me, I would like to see, for example, how we use those cash, how we could invest those cash to some things. Yeah, impact on profitability. Actually, how we can measure profitability. First of all, gross profit margin. I will introduce you general formulas for profitability measurement. Gross profit margin, net profit margin, return on assets. Actually, stakeholders and shareholders, they don't how to say. They don't look at this index, but they look at the return on equity, because they want to know how equity actually, how many income they generated, their equity generated, and how many, I don't know, cash they can invest next year or right now, or how many cash they invested already, but how it already influenced on net profit. And earning per share. Of course, they want to know how many earnings they generated during the same period for one share. It means that actually we can see the price of share. Actually, I will not provide price of share primary and after this transporting. I don't know why, but actually I don't calculate it at all. Yes, I already said that profitability is crucial for business, and it's actually a good measurement to understand how we can actually live next year and in early future. Yeah, there are some formulas for assessment of profitability. And I will use it a little bit later when I will show you my working files, how I translate local figures from local standards to IFRS. And you will see how it changed actually by changing, by doing these changes. Yeah. As I said, gross profit, operating profit management, net profit, the return on assets, and what is most important for companies I don't know, but for shareholders and shareholders, yeah, return on equity. Yeah, and different standards applying actually application or in our accounting policy can impact enterprise profitability in different ways. First of all, we can recognize some revenues in different ways. We can recognize some expenses in different ways. And of course, we can, for example, evaluate some assets in different ways and liability recognition. What is different between local standards and FRS? Right now, I noticed that there are common 4-5 standards. First of all, provision standards, that describes how to evaluate provision, how to recognize provisions. And if, for example, in Lithuania, I can speak only about, by the way, I can speak also about Ukraine. For example, or one of our company, it has about 200 fuel stations, and some lands are rented from the municipalities, and all those rents we just by local standards we recognize like as expenses. Just put it to expenses some certain line. I don't know, for example, rent expenses, and that's all. But for example, in IFRS, we cannot do that, only recognizing those expenses as expenses, as operating expenses. We have to post it in assets level, assets part. We have to post and of course it refers, and it depends on how many years we have in our agreement with some renters. For example, first of all, if we have for 5 years or for 10 years some agreements, it means that you are economist, you know that what we pay right now, it means that after 10 years we will pay more. And when we discount those all payments, we have to create this I will show you also this file, how I recognize assets and liabilities, and how I put it to expenses, and how I depreciate it. And if by local standards we do only one record, according to IFRS, we have already 6 records. All in finance, accounting, we always have at least 2 records in credit and debit. And then in this situation also we have at least 6 records in debit and credit, and so on. And after all those activities, of course, assets could be could change, liabilities could change, and of course all expenses recognition also are changing, and it does impact on profit. As I said, first of all, provision. Second one, lease liabilities, lease contracts, not liabilities only. Third one, financial instruments. For example, in Ukraine, I definitely know that what we, for example, give from bank, like a loan, we just put or record in our financial statement by current value. But IFRS, if we have a loan, if we know how long we will have it, we also have to record this already discounted figure. And also it change dramatic. Sometimes it could change dramatically what we have in local financial statement and what we will have in following IFRS. What's more? Assets valuation. For example, investment valuation. By different standards, we can apply different useful lives, and also it could change assets. It could change expenses part in the profit and loss report, because that amortization and depreciation could be changed also in bigger or less part. Yeah. Yes, I already described that all those recognition rules, but what we actually commonly use in Lithuania or in Ukraine, when we have invoice, when we sell something, we invoice it, and of course we recognize that revenue. It's commonly a thing. Of course, it could be that recognition of sold assets could be a little bit different, but commonly we use this rule. Just when we invoice or when we issue invoices, we just recognize revenue. Same is with expenses. We recognize expenses when we get some invoices. We just post it, record in our accounting general ledger, and that's all. Yeah. Of course, I will not tell about all seven rules of revenue recognition, and as I remember, 8 rules of expenses recognition. But as I said, most probably all companies, of course, if for example they are in something, they do investments, they provide loans. Of course, this main rule to just to issue invoice doesn't work for them. But in normal company, without those specific activities, what we issue or what we get, we recognize as revenue or as expense. Yeah. Yeah, import. As I said, that imported IFRS or GAAP, it's not doesn't matter what we have standards, but it means that all decisions were made by stakeholders or shareholders based on accurate and informed data. Yeah. Expenses, as I said, 8 expenses rules. I described this one mainly commonly used when we just get invoice, we just recognize it. Yeah, asset recognition. Yeah. It's also a lot of things, but still when we have invoice for asset, or just we signed agreement, or we have agreement for some asset, we post it or we record it, and after by fair value, it's commonly for every company. There are some things could be done differently, but mainly, of course, assets recognition by value. There's only 2 things. No. I don't. I wanted to say that. Yes, we can recognize assets like by fair value or by discounted value. Of course, if we use or we want to use after time, we just have to discount it. And of course, the fair value or just value of assets and depreciation could be changed dramatically also. Both things are right. Just we have to decide what we do in our finance policy.
Excuse me.
Yes.
We speak about current period, or it's not important?
Yeah, if we speak about current period, if we will use our assets for example, next day, of course, we will not discount it. We will but for example, we will for example, about assets under construction. You know, we have assets under construction. We do something, or we do repair, but we cannot use it, and we actually have. Of course, could be that we already have buildings. We already have some tools. We have some mechanism, but we will use it a little bit later. I don't know, after some time, but we still already have it in under construction. We cannot depreciate it. But for this asset by IFRS, we already have applied discounting, because still, you know, but present value. It means that right now it let's say 100 euros, but next year it could be 2,000 euros.
Yes,
because
I understand.
yeah. Because we use it after 1 year. It's different between local standards and IFRS standards. Yeah, I already said about those asset recognition. When you will share, you can actually read by yourself. But I already described it. Also, if we evaluated assets correctly, that means that our stakeholders, shareholders, made a right decision. It means, you know, it means that everything is linked. Everything is linked by with decision that made by in company by stakeholders or shareholders. Why I always use those stakeholders? I know that sometimes when I gave my lesson in the university, and the students asked me why you use those two descriptions, shareholders and stakeholders. I can explain, because shareholders, okay, they have share, they want to see their profitability, but there are a lot of stakeholders, like departments director, like, I don't know, managers, like investments. Yeah, they also are interested what happens with the company, and I always use them because they are responsible for some part of activities, and if we follow our financial accounting policy, it means that they make their decision, and they are informed about what happens in our company. Liability recognition, yes, of course, it's yeah, it could be also impacted on profitability, because some liability could be like liability, but some liability we have discounted also. While discounting, you know, some figures are just occurred in profit and loss report, and it could impact on profitability, and of course sometimes dramatically too. What about liability recognition? It's also related to, for example, as I said, sixth FRS standard. When we have we have to record lease contracts in both part of sorry. Yeah. I was wondering what could be that I just that okay. Liability. As I said, first of all, it's related to provisions. Second one, to these contracts, and of course, how we recognize expenses and revenue. But mainly and commonly used rule is when we have, for example, invoice, and we have, for example, due time 1 month or 2 months. It means that we record, of course, we recognize that figures in expenses, but at the same time we recognize it in liabilities part. Same as receivable recognition. When, for example, we rent our assets to someone, or we sell our products to someone, we recognize our revenue at the same time. At the same time, we recognize receivable in our balance sheet part. Yeah. There are also a lot of rules to recognize profitability, to recognize liability. I shortly spoke about it, but you can find it in my presentation also. Yeah. What is important? It is important to liabilities. We always have to know what obligation we have in our company, what liabilities we have, and how many time we have to pay to cover our liabilities. How many time we have give to generate cashes and so on. Yeah, and right now I will show you a case study. As I said, my work actually about 3 years ago, 3 weeks ago, I finished my audit by FRS standards, and you know, to translate from local to FRS, you can see right now how many working files I created. It means a lot. Different taxes, lease contracts, I have IFRS closing adjustments, a lot of files, and we have rents and actual figures, and I will have to, I had to discount rent, and I have to collect all figures from already paid transaction, for example, for rent to our municipalities. And yes, it's not easy job, but it would be better if we choose only one financial standard, or only one accounting policy, but we have two, local and IFRS. IFRS is used only for group purpose. It means that we consolidate everything. And but why we choose to have two policies? Because our shareholders think that dividends which paid by local standards are bigger. But how you can see right now, they are wrong. And actually, it means, you know, I even didn't have any discussion about it with them. That, you know, that the IFRS standards are more profitable for you as for shareholders. But when Tatiana invited me, I decided, okay, I will analyze this case, and could it be that this analysis actually helps me to prove to choose only one financial policy, because right now we do those two, and of course it's a lot of investment, of effort investment actually. But okay, as you can see, a lot of files are used for this transaction. First of all, what we apply IFRS 15 and revenue recognition, as I said, that it could be differently. Second one, the IFRS 16, it means that I use it for lease contracts, because we rent some assets, but I will show you only land rent from municipality. But we rent actually main rules for this standard. If we have agreement more than 1 year, if we have agreement for more than 5,000 USD, it means that we have to apply this standard. It means more than 1 year and more than 5,000 euros. Yeah. And this standard is used only for provision, because what says IFRS that if we rent something, we have to create provision for utilize or to clean environment. But you know, if for example we rent some land, and we for example build some buildings on this rented land, it means that after agreement end, we have to clean this land, we have to destroy all our building and to just to utilize somehow. And this IFRS standard actually dictates us how we should record provision in our financial standards. In the local standards, nor in Ukraine or Latvian or Poland, we don't have it. Because of that, actually, but you know, it may this contract and provision actually main target what I did for, I don't know, for 5 years, last 5 years. Yeah, and income taxes, because you know, when something arises in our financial statement, it means that sometimes we can find that some different taxes occurred in financial statement, and of course, following the main rules of tax authorities, the figures for paying taxes, or for amount of paying taxes, income taxes, of course, can change. Yeah, and investment property, of course. In Lithuania, we have just fair value. It means that not fair, but accounting value. What we bought and we record. But in IFRS standards, no, we have to evaluate it by market prices, and of course to apply already different useful life, because you know, when we evaluate of assets, or those experts can say to us how which useful lives we have to apply to those assets. And yeah, probably a lot of speech, but yeah, I would like to show you 6 standards, and yeah, no, just one moment. Okay, I will find this one. These contracts, you see, I have really created I would say smart one file. I always want to say about myself only good things. Sorry, I tend it. Yeah, you see that if, for example, we rent land from municipality, it means that in our local standards we show only those expenses for rent, but not in IFRS. I have to yeah, every piece of land I have to discount and to put it in assets. Of course, I have to calculate liabilities, future liabilities to municipalities, and of course, after that, I depreciate it, and after that, I have to calculate interest rate, interest for this land, and of course, I have to correct payables, what we already paid and what we should pay. Yes, it's a really really good one file what I created, but it seems it helps to my colleagues in Ukraine, in Poland, and Latvia also. Yeah, second one I wanted to show you is file. Yeah, it's file. Yeah. I will not show you different taxes or something, or a discounted provision, but I would like to show you this one file. I don't know if you see or not. but I can a little bit make it smaller. And if you can see, this one, BA column, presents our local standard, local BS. This one, BI, already represents my figures, my balance sheet, or my income and loss report following IFRS standards. And what we see right now, that total assets changed because we have new rules of depreciation. We have a right of use assets. I said it's a sixth standard. Of course, we apply everything we changed, and we got different taxes. And that provision I also already described. And all these things actually occurred in my balance sheet, and you can see that all assets, actually all companies' value decreased by 2 million. You see it as it decreased. Of course, it decreased also in total equity, because we have 22 and right now we have 6. It means that by 7 million decreased our equity. But what actually increased by doing all those transactions, that all total comprehensive income actually was increased by I don't know, about 40,000 euros. It's not so long, yeah, not so big. But I would like to show you profitability, local GAAP and IFRS. You can see that gross profit, because gross increased by IFRS twice. Net profit margin, I would say that it is not changed. It wasn't changed. A return on assets, you can see that it changed a little bit by 3%, and the return on equity increased also already almost twice. But it depends on actually decision of our shareholders. Depends which accounting standards we use for our accounting policy. Depends on what they want to see. If, for example, they want to invest, of course, they would like to see. They would like to see. They would like to see. Total equity. They would like to show that their equity is bigger than by IFRS standards. And of course, assets for not only assets, but it actually whole company's value is bigger by local standards, not by IFRS standards. Yes, what I wanted to show you, I already shown.
Okay. In a few time repeat, she is not professional lecture, but today we saw about 50, probably 50 years later, such Inna prepared for us, and I sincerely thank you for your rich and informative lecture. And anyone have questions?
If you have any questions, please provide me them. I don't know how to stop sharing. I can stop sharing, yeah? Yeah. Oh, okay.
Okay. Dear students, dear colleagues, maybe anyone have questions? I explain Inna such some person haven't technical opportunity for speak. But maybe you can write on your question on chat. Yes.
Yeah, I can
Read.
where is yes, I have chat. Yeah, I have chat. Yeah, don't hesitate. Actually, you can write any language. I speak 5 languages. Even you can write in Ukraine.
Inna, I would like to ask you if you can send your presentation.
Yes, of course. I will share with you my presentation. I just delete my links, okay, in my personal file.
Super.
Yeah.
Thank you again, and I hope for a face-to-face meeting in Kiev or Vilnius or maybe in Lviv.
You know, I had tickets to Kiev for 23rd February. No, 24th February, because I should have a business trip to our branch. And when we woke up, I just understood that no business trips because the war was started. Yeah, unfortunately, but yeah, it was, and I wanted to travel with my family, whole family, with my children, because I wanted to show them Kiev, because I like Kiev and I like Ukrainians. Really, I really thankful to you for all Ukrainians that you are on the front line, and actually you defend us. And as a person who has Ukrainian blood, you know, actually I admire you that when I speak about it, I don't find right words, and I don't know what to say actually. Big stronger.
In last year before war started, many my colleagues from abroad called to me and said, come to us because in your country started war, and I not believe it.
Yeah, actually,
I laughed on my colleague and say, it's unreal. Such in 21st century, it's can start war, but we have other real.
But you know,
Okay.
couldn't be any ideas why it started. It started because someone wants to be, I don't know, young. Could be that he thinks that he will not die, and everything that is around him is him. I don't know actually, but yeah. Thank you, Elena Novitskaya wrote me. Thank you very much, please, and thank you for wishing me success. I also wish you success. All those beautiful things you had before war, I think you will have in the near future. Thank you very much.
Thank you. Bye.
Bye. Thank you.